So we move to our activity questions on VAT. I've chosen activity 4 as the first one because it concerns this area of tax point. And I've noticed that students sometimes get confused, but I don't think there's any reason because the basis of this is just literally memory or rote learning, a set of little rules. I'll explain that more fully in a moment. Okay, so in terms of the question here, we see the scenario, and indeed we're just asked to state the tax point. What is the tax point for VAT purposes? And indeed, as a result of that, how much output VAT should be accounted for in Mr. Tome's return for this particular period. And we'll see when we look at the scenario, we've got basically two main amounts to sort of decipher or consider. So there's the deal. In terms of the scenario, we see, well, it's referenced as mentioned, the quarter ended 30th September 2024. We see that this individual, Mr. Tome, has sold a bulk order of stationery. Note the total is 1,000 excluding VAT. Be careful now with this examiner and inclusive or exclusive of VAT. He uses this trick all the time and students don't watch for it. So we have this deposit paid first. Okay, remember the quarter ended 30th September we're dealing with, excluding VAT, on the 12th of July 2024. So basically in the first month of the quarter. Note when he placed the order. Okay, so in addition to that, we see that the stationery was actually collected, on the 1st of September, and indeed Mr. Tome issued an invoice on the 1st of October. The remaining balance paid on 8th of October 2024. This whole thing regarding tax points is really a question of, obviously, a variety of dates in the scenario, and which really are the most important dates in terms of these two items. The 100 first off, and outside of that, the 900, okay? So in terms of dealing with it, we've got to distinguish between, I guess, the basic tax point and indeed the actual tax point. So when you see questions in this area, think, okay, first off, what's the basic tax point? And then secondly, in relation to the conditions that I mentioned earlier on, think about how these actual tax point conditions kick in or not with each individual payment. I'll show what you mean in one moment when I get this up and running. Bear with me 1 second. Do find the portal a little bit tricky from time to time. Okay, so let's deal with this in terms of the first and indeed the second payment. What they do, which I think is quite useful here, is that they lay out these sort of areas in relation to the basic versus, note, the actual tax point, what we need to rote learn. Okay, so first things first, the basic tax point, where we're talking about supply of goods, is the time the goods are made available to the customer, okay? So in Mr. Tome's case, this is clearly the 1st of September 2024, and that was detailed within the scenario. In other words, the individual collected the stationery on the 1st of September. So that's the basic tax point, but we know that that can change because of the actual tax point rules, okay? So the actual tax point is the basic tax point. In other words, we'll take 1st of September unless these three items are in play. Payment received before, invoice issued before, or invoice issued within 14 days after the basic tax point. So you literally have to go down each of these three and say, are they in play? Now, the only way you're going to go down them is to remember them. So firstly, payment before, invoice before, or invoice within 14 days after the basic tax point. So in terms of the 100, it's sort of simple enough, really, isn't it? You know, the actual tax point for the 100 deposit is 12th of July 2024, as this is before the basic tax point. That's it. That's done. Yeah. So in terms of the payment was received, so I'm taking the actual tax point. For the 900, slightly different. In terms of the actual tax point for the remaining is 1st of September, i.e. the basic tax point. Note, because the invoice was issued more than 14 days later. So in effect, actual tax point equals basic tax point based on these rules, okay? Now, the second part of the question was, okay, well, what's the deal in terms of the output tax? Let me just remind you, and indeed myself, yeah? Okay, so how much output tax should be accounted for, okay? So in terms of the detail, well, we know how much it's going to be because all of these items, i.e. both, are within that quarter. Therefore, output tax must be 20% on top. That's it, we're done, okay? Remember this area, it does come up, I'm not saying every single sitting, but it's an area that students tend to sometimes underperform in because they haven't memorized these rules. Not too much, okay? Thanks for listening.